Hello, hello, hello. How are we doing, everyone? Go ahead and get YouTube open on my phone, and we'll go ahead and get into it so I can see the chat. All right, awesome. Looks like we got a full house already. All right, just opened up the chat. Lucas, good afternoon. Doing good, brother. Doing good. Hope you're doing well. Julian, hello, hello. Ahmed, good afternoon. Templeton, hope you're doing well. Yes, I am. Hope you're doing well. Jay, what's going on? High speed trading. Good day, brother. Hope you're doing well. All right, awesome. Sigma, good evening. Frank, hello, hello. Anita, hi, hi. Good to see you guys. Colin, good evening. Cycloss, first time I'm early to class. Awesome. Happy Thanksgiving to those celebrating weekend. That subs list is swelling. Gonna be a flood soon enough. Appreciate that, AB. Yeah, man, we're definitely growing. We're definitely growing, and thanks to all your guys' support, much appreciated. Mr. Nuller, hey guys, another Sunday, another dollar. Absolutely. New week, new money. Let's get into it. Earl Garrison, good day, Dylan, and everyone. Good to see you, Earl. Hope you're doing well, brother. Awesome. Wow, so we do got a full chat. Awesome. Olawale, KK, hope you're doing good. I'm doing well here. Christian Cadet, another great week waiting for us. Absolutely. Sal, everyone come with pen and paper early to class. Awesome. Love to see it. German Ortiz, hello, Dylan. Hope you're having a good weekend. Although the world circumstances, definitely a lot of tragedy going on, but very blessed here on this side and doing good. So I hope you guys are all well. Most importantly, I hope you guys are safe, especially with in light of everything we have going on around the world right now. I do hope everyone is well. Awesome. So again, full chat. All right. So let's go ahead and get into it. So one thing I did want to say is we do have quite a few new members as our subscribers list is growing. We also have quite a few members here signing up for the Adora Trading membership on YouTube. Just a way, again, to show support. And then I'll prioritize those questions as I discussed. But again, just wanted to thank all you guys that are members, for sharing your appreciation and support. And then also want to say thank you guys for coming out here on a weekly basis, supporting me, getting the value that I'm here providing. So again, this growth where we're at as a community would not be possible without all you guys. So wanted to share my appreciation and gratitude for you all. JJIS, welcome to Plus Adora, my man. Earl, thank you very much. The appreciation is very much appreciated, my brother. Wasim, hey man, how was your trading week? It was good. It was a real light trading week, not pushing it that much as we discussed the previous week. And then obviously we saw the crummy price delivery as a result. So we'll go ahead and touch on all those things. Going to teach you guys some new things you guys probably haven't seen before, amplify some concepts, share with you guys what I'm doing. And again, we'll take a look at opportunities that we have ahead of us for this week. So you guys should be able to see the economic calendar. And by all the messages, I guess my audio should be good. You guys are seeing the economic calendar. Awesome. So again, just wanted to touch on what we have going on around the world. Again, can't touch too much on this on YouTube, and I have to be really careful with specific words I say. But there are things going on across the pond on the other side of the world that we do need to be mindful of as traders. As much as I would like to keep geopolitical discussion and these things out of the conversation and just keep it strictly business, I guess, in quotations, as you might say. These are things that as speculators, as traders, we do have to be aware of and conscious of. So in light of what we're seeing on the other side of the world, a lot of militaristic action is being taken. And again, not going to touch on it there because on YouTube, again, they'll give me some issues. But so in light of what we have going on around the world, this will significantly impact the markets. I'm expecting significant volatility coming into this week. And before I even get into my analysis and my expectations for the week to come, keep in mind that a crazy gap open, either higher or lower on any asset, can completely throw everything I'm looking for right out of the window. Because these market makers, the people that are behind the scenes controlling these markets, they don't let these opportunities of things going on around the world go to waste. So what I'll be expecting is a extreme gap open this Sunday here at 6, and I will be in front of my monitors and my desk monitoring what we're seeing at the gap open, how the markets are trading, and how they decide to utilize the Sunday gap opening for sentiment. So I'm going to be monitoring all these things. And then again, I'll give you guys updates in the Telegram as we go throughout the week. But I did just want to share that before we get into it, that a extreme gap open, either higher or lower, could completely invalidate and give us a completely new framework to work with. So some things just to have in mind as we go into this new week of trading. And then now with that, before we get into the technicals, let's look at the economic calendar, what we're looking at, and what I'll be expecting as a result. So bank holiday on Monday for the USD. So not going to be expecting a whole bunch there. I believe the market should be closing in the afternoon. So not going to be too interested on Monday. I'm just going to be using that to more gather intel. I'm going to want to see, okay, how are they setting people up to see certain things and what's in play in terms of liquidity and inefficiency going into Tuesday. So Tuesday, no high impact news other than the FOMC members speaking. And that's one thing you guys are going to see across this whole week is I believe there's Fed members speaking just about every single day. And then we have FOMC meeting minutes. So it's just a jam-packed week with economic news, CPI on Thursday. So definitely things to be mindful of moving forward. So CPI on Wednesday, or PPI on Wednesday, excuse me. And then we have, Fed members speaking all day or every day this week. So that's definitely going to bring a lot of volatility into the marketplace, obviously considering what else is going on around the world. So definitely you want to be mindful of that in terms of a risk perspective, because as money managers, making the money is great, but we have to prioritize the risk and measure that before we ever even consider engaging. So definitely things that you guys are going to want to have in mind moving forward. All right, so let's go ahead and get into the technicals. Now that we got all that out of the way, let's go ahead and get into what I'm looking for this week and what my expectations will be moving forward. So looking at the monthly chart here for the dollar index, we had a monthly open here in the previous week. We got an expansion higher and then we pulled back into the range. So again, the reason I wasn't too terribly interested in last week's trading is because this is typically what occurs in that first into the second week of every month. Because as we know, before a candle expands either higher or lower, it's going to have a wick to both sides. So what I like to see if we are bullish is I want to see the market open, trade below that opening price into some type of discount array, and then offer the market higher. So that's what I was expecting last week, which is why I wasn't terribly interested in the price action. So again, I'm still expecting this monthly candle to be a bullish expansion. So if we trade below that opening price, we're going to then refine this on the weekly and daily chart. And then I'll give you guys more specific reference points that I'll be looking at. But again, I'm still bullish. Nothing's changed my perspective on the longer term for the dollar index. So again, just for targets on the monthly chart, I believe I covered this last week, but on the upside, we'll be looking at consequent encroachment, which is 50%. I think we just fell short of that. So I'll be looking at that and then eventually a full repricing of this. And then again, how we trade there, we may be looking to take out this high moving forward. So dropping down into the weekly chart now. So looking from where we opened, what was the greater magnitude of movement, higher or lower? From where we opened, it was obviously higher. So even with the bias, even expecting lower probability, more range-bound conditions, we still had targets hit. We had a buy-side liquidity pool here on the daily, and then we were looking at the low end of the weekly inefficiency here. So from this candle's low to this candle's high, we hit that perfectly last week in Monday going into Tuesday, which is predominantly when I'm looking to do my trading during non-farm payroll weeks. And again, we had targets hit, and then we pulled back into the range. So let me go ahead and make this the crosshair. I think you guys can see that better. So what I'm going to be looking at into this coming week is, again, we've had bullish order flow. This retracement doesn't change anything. We've had 12 weeks of consecutive higher prices. And again, we were all over it, expecting higher prices throughout really the whole summer into the fall months. And we've been seeing that consecutive bullish delivery. In the face of all the news articles, banks coming out saying dollars over, with all the things we have going on in the BRICS nations, how, they're challenging the dollar and removing it from the petrol standard, all those things that are occurring, everyone was calling for the dollar to crater. The dollar's dying. It's no longer king dollar, they were saying. I'm using that narrative to trade against it, because if that's what they're pushing out, that's what I use news for when I read, when I turn on financial channels, or if I comb through news articles, I'll read what it is they're saying. I'm not reading it because I want their point of view. I want to see what the sharks are feeding the little fish or the sheep. And what they're feeding them, I use that insight to then build a narrative on how I want to see price trade. So as we were seeing the market trade through these equal lows here, like, again, everyone was calling for the end of the dollar. The dollar's over, but again, dollar's still king until the BRICS nations take it out for good, which, you know, who knows when that's going to happen. But I'm using this narrative to create my bias and a narrative for what I'm expecting. So if everyone's looking for the dollar to crater, they gave them that cookie here, taking it below these equal lows. And then what they do, aggressively repriced it higher. So again, I've been taking our attention to these highs for those reasons. And again, that's how I'm using the news to see, okay, what do they want them to think? And then I'm using that to develop my analysis. And that's why it's been panning out to script. Because as everyone's been looking for it to go lower, obviously the market's going to keep repricing it higher as long as we're in a buy program. And again, we've been all over that. So looking at the technicals for this week, we have a fair value gap here that we've created on the weekly chart here and here. I'm just highlighting this one because this is the one that's of interest to me. And I'm going to want to see how we trade there. So we can get down into this one and still nothing really change. But I'm going to want to see a reaction here from this one. And then that'll communicate to me that we are very bullish. But again, if we get through this one, then this fair value gap here below market price would have my interest moving forward. And again, how we trade in those discount fair value gaps will be influential. So I'd want to see us trade down into it, get support, and trade higher. Because remember, my targets have been the same for the past 3 to 4 months, which has been higher prices and this buy side liquidity pool here specifically. And then through that, I'll expect a repricing of this blue rectangle, or SIBI, sell side imbalance, buy side inefficiency. So that's what I'm going to be looking at here moving forward. Arbaz Khan, any idea why dollar went down? Go ahead and check out last week's video. We kind of covered why it wouldn't be a great week. But again, 12 weeks of consecutive bullishness. This here is nothing. All right, so dropping down into our daily chart now. Let's go ahead and get to it. So again, this swing high here on the daily chart, buy side stops are trailed there. We repriced into that beautifully, which was my first target. And then second target was the blue rectangle. So those are just low hanging fruit objectives. Market hit. And then again, we're seeing that retracement. So what I was monitoring in the middle of last week was this down close candle, bullish order block, and this inefficiency and how we traded there. So as soon as this candle here on Thursday closed below consequent encroachment or midpoint of this fair value gap, and mean threshold of that bearish order block, my attention went to lower prices for dollar. Not lower prices in the sense that I'm bearish, but lower prices in the sense that it would make sense for the market to retrace. Markets typically don't go straight up. Even though we've been seeing that, we're still going to expect some measure of retracement. For example, when we were here and then we retraced lower to take out these lows, I wasn't freaking out, changing my bias, flip-flopping around, being clueless. I was telling you guys that, okay, if we're going to remain bullish, what's the market going to do? It's going to take out these lows, accumulate those stops, and then reprice higher. And again, I want to take our attention to that's exactly what I'm going to be expecting here. Why? We have not seen a stop run on the daily chart in a while. We've just seen consecutive higher prices. So now stops are trailed to what level? Here. So I wouldn't be surprised if the market makers wanted to reprice it below that low sell side, accumulate those stops, and then reprice it higher. That's personally what I'd be favoring moving forward if we are to remain bullish. So last line in the sand for me being bullish on a daily chart would be this bullish order block in here. So this down close candle, if we get through that on a closing basis, then I'll have to reassess and I'll probably look for these lows in here. But I'm not favoring that. I'm still looking for higher prices. I don't call tops and bottoms. I let the market definitively show me that we're changing course. And from what I'm seeing right now, we've just seen a crazy move higher in dollar, and we have not seen hardly any retracement. So it'd be logical to see that, especially towards the beginning of the month. So again, this sell side here has my interest. So if we take out those lows, accumulate those stops, and then absorb them and reject higher, I'll then take my attention to the buy side here. And then this buy side is the second target at the 108 big figure number. And then through that, I'll like this volume imbalance on a monthly chart, which is about 50% of this rectangle. We'll look at the 108.5, 109s. So that's what I'll be looking at moving forward here on the dollar index. Make sure I covered everything. Yeah, I believe that's everything. All right, so hourly chart here for the dollar. So we traded higher. So just recapping last week's trading. So we opened here on Sunday, traded higher. Remember, we talked about this being a balanced price range. So the market did not need to trade down into this because it's balanced. So we traded lower, created an order block, and expanded higher. Remember, I took your guys' attention to these highs, saying markets don't top like that. And then through that, we looked at the blue rectangle as an upside target. So we hit that, tried to rally once more, failure swing, and then we broke down. So once we broke down in here, I took my attention to lower prices. Again, not that I'm bearish longer term, but simply because it makes sense for it to retrace. So what I was looking at is dealing range from low to high. And then below, I have the inefficiency, the quadrants on here, because I'm going to teach you guys something on grading a price swing later. But just looking at the equilibrium here, 50%, as soon as we saw this breakdown, shifted market structure, my attention went to discount levels. So then this fair value gap in here, this bullish order block is a target. And then through that, you guys can see we repriced into that sell side. So what scenarios are going through my mind going into this new week? So seeing here that we traded higher, cleared the buy stops, and aggressively rejected going for this sell side. This sell side here, that's the low on the daily chart. And again, funds, fund managers, fund level traders, banks, they're trading on these time frames. So that's why I look at the daily, weekly chart as significant, because the inflows of the market are coming in on those specific levels. So what I'm going to be looking at moving forward is this sell side here is a low that's linked to the daily chart. So if they're going to take it higher, I would want to see them take these lows, purge the sell side, and then reject and go higher. So again, barring any extreme gap open, what I'd be looking for early on in the week is trading higher into this breaker here, the 3 down close candles, this inversion fair value gap, and then rejecting, running for the sell side. Again, unless if we gap below here, then obviously, we're already there. But assuming we open or we gap higher a little bit, I would want to see the breaker inversion down into the sell side. And then how we trade at that sell side will be significant. If we're going to remain bullish, I'd want to see the sell side taken, rejected, and then aggressive displacement higher, confirming institutional sponsorship at those specific levels. So that's what I'm going to be looking here for here moving forward. If we don't take out this low and then we reprice through this breaker here in purple and this inversion, and then we just get above that, then my attention is going to go to these equal highs and then all the higher targets I shared. So these are just kind of the scenarios that I'm walking through going into Sunday. And again, we don't know where the market's going to open. They can gap it open either higher or lower. And then how we trade there will be significant. So these are just the scenarios, again, that I said that I'm just going to have in mind moving forward. But again, considering everything we have going on in the world, the economic calendar, we could see a lot of volatility. So definitely buckle up for that and be mindful of that as risk managers. All right, so let's go into the bond market. And then again, I'll touch on Forex briefly. We'll look at those things. Awesome. All right, so monthly chart for T-bonds. So we've been calling this monthly chart lower, and then ever since we were up here on the monthly chart, where did I take our attention to? These equal lows here, the sell side, and then this huge inefficiency here. So the market's been aggressively repricing into those levels. So again, in the face of all the news, that was saying the dollar's over, the dollar's dying, it's never going to recover, it's going to crater. How did I confidently know the dollar was going higher in the face of all that? Again, institutions, funds, all saying these things, parroting this nonsense. How did I know to go against them and trust my analysis? Because the bond market. So because the T-bonds are screaming lower, this indicates to me that, okay, dollar's going to see a rally off that. Why? Because the interest rates are going higher. So again, I was looking for these equal lows. And then what is this also? A market maker sell model. So again, ICT taught, or not taught because he already taught this a long time ago. Actually, I think he just recently brought it up again to light in terms of the second stage distribution and how that's his silver bullet model. So looking at the market maker model here we have the original consolidation, and now we're attacking these levels. So that's how from when we were all the way up here inside this fair value gap, I was trusting that the market was just reaccumulating to satisfy this market maker sell model and reach terminus. So I'm looking for these equal lows in here, and that's how I was confidently able to tell you guys that dollar's going higher, because I'm looking at the internals of the marketplace. And this is what most people are missing in their analysis for that additional confirmation. And again, that's what makes, what we do here high probability and keeps us ahead of the curve no matter what's going on. Let me go ahead. I got my notes up here. All right, so let's work our way down. So again, market maker sell model, still looking for these equal lows. And then this inefficiency here has my interest on the downside. So weekly chart, let's go ahead and get into the business. So again, we broke down here early on. And again, just recapping, inefficiency here said we'd sell off for what? These equal lows. Retraded down into them. I said then it was reasonable to see what? Some measure of internal range liquidity. Why? Because the market goes from external to internal and then back to external again. So again, this is why we've been calling this market lower. And then you see each week just aggressive expansion for the levels that we're looking for. I believe that's it on the weekly. So let's go ahead and jump into the daily chart. All right, so for the daily chart, looking at last week, or actually just going back a couple weeks. So we had this fair value gap in here. I took our attention to not wanting to get above this bearish order block. And the fact that we were rejecting this daily fair value gap gave me confidence that we're going to reprice lower. Why? Because the bodies tell the story. So the wicks doing the damage, that's fine. That's permissible. That's the coloring outside the lines that we have to be okay with as analysts. But when it comes to closing, I want to see the market respect these levels. So here we see that market's respecting the fair value gap. And then again, we aggressively reprice lower into the levels we're looking for. So let me go ahead and touch on a couple other things, teach you guys some things that I'm using in my analysis to confirm these things. So let's go ahead and start off with grading a price swing. So again, all these things are only effective, keep in mind, is because I understand where the market's going on those higher time frames. So once I understand where these higher time frames are reaching for, I have an array, a plethora of tools that I can reach for confirmation, to tell me specific things. And I'll go ahead and give you guys a little bit of insight into that here for free on this Sunday session. So again, understanding the market maker model framework on the monthly chart, again, that's what allows me to trust these things. So what I'm doing is once I understand that the market's going to want to likely draw into this monthly fair value gap, and again, you could put it at different levels, this level or the consequent encroachment. The thing is just where's the market going? I'm just going to put it here. Why? Because it's those equal lows on that monthly chart. So this is the beginning of the move or inception. This is terminus. Why? Again, this is heavily linked to the monthly and weekly chart. So as we're trading lower here, I'm putting a Fibonacci on this price swing and I'm getting gradients. I'm looking to see what's the upper 75, 50% equilibrium and the lower 25%. And then obviously this is where I think the market's going. So I'm already anticipating these PD arrays forming. So at 0.75 here, if my attention's down here to these discount levels, PD array or an entry is going to form here at 0.75. At 50%, we're going to have a consolidation and stop run. Here we see what? Consolidation. And then we trade higher above those stops. So I already know when the stop runs are going to occur, when consolidation is going to happen, and when new entries are going to occur. So here we see 0.25. That's why this fair value gap here was a short, because it's these PD arrays that are forming at these gradients that I'm already anticipating them occurring. But again, this is only effective for me because I know where the market's reaching for. So again, I'm using these gradients. And then in addition to, I'm using breakaway gaps. So here we have a breakaway gap here. And then this becomes, this one here is what I'm referring to. This one that was left open. And this becomes a measuring gap. Why? Because just looking from this swing to here, what's right at 50%? This inefficiency. So I didn't want to see this inefficiency open. And if you hear in my Sunday streams, I'm giving you guys very specific analysis with very specific parameters that I want to see. So when we're down here and I'm saying, I don't want us to get above this bearish order block, what does that mean? I'm already classifying this as a breakaway gap or a gap I don't want to see fill. Why? Because if this doesn't fill, then it's a slam dunk that it's going to reprice into here. So that's how I'm grading price swings. That's how I'm using the higher time frame top down, again, to reach unrivaled precision. And that's how I know what's going on the dollar, what's going on in the currency market, because I'm looking at all these factors. So felt a little inspired to do some teaching as regard to how I called this move. Again, I'm not someone that just likes to teach on hindsight, do these big long Twitter PDFs. And again, not saying there's anything wrong with that, but can those people teach and call what it is that they're sharing? So that's why I like to teach and use the things I'm calling as a medium to teach you guys, because you guys know we've been calling this market lower all the way since the beginning of the year here. We've been calling this market lower. So again, now I'm just sharing some of the tools that I'm using to call these markets and why I'm able to reach this level of precision. And then for those of you guys that want to learn that deeper, again, you guys know I'm going to be opening up training in the latter portion of this year going into 24. So moving forward here on the daily chart. So what I'm going to be looking for here is just a repricing into this low. So here we have a bearish order block. We traded down through that. So I'd want to see this bearish order block keep us at bay and just run for these levels. I wouldn't want to see us get above that. Why? Because we're so close to these levels. Remember, there's real orders here that the market's attacking. So is the market going to want to dance around those orders and then do a deep retracement? Again, I don't prefer to see that. I prefer to see the market just aggressively dive for those orders and absorb them. But if we get above this bearish order block, then we just likely see a deeper retracement into these inefficiencies here, which I prefer not to see. Again, I'd rather see us open, hit the bearish order block, and then run lower. And again, it doesn't even need to hit it. It can just open it and run lower. Why? Because we're so close to the sell side on that monthly chart. So that's what I'm going to be looking at here moving forward for bonds. And again, that allows me to confidently trust that dollar's still going to be repricing higher. Why? Because T-bonds are going lower. And then for stock index traders, as I am, remember there's a 6 to 12 month lag time in the T-bond market to the stock market. So you tell me, what does the outlook look like for the stock market? Again, not pretty. So that's why we've been calling this market lower, and why I've used it to qualify other things. I know a lot of you guys are just here for the analysis, like, man, come on, get on with it, man. There's a lot of people here that want to learn, so I'm managing both worlds here. All right, so looking at interest rates here, just real briefly, absolutely bullish market. We've been calling 30-year yields higher, and again, that's allowed me to trust that dollar would be bullish as well, and then we finally smashed into these equal highs we've been looking for. So through that, my attention goes to these equal highs here for the T-bonds, or for the yields, excuse me, longer term. So we just called a monster move in the bond market from this fair value gap higher. And again, I don't see that we're finished. Looking at the 10-year yield, same thing. Here we have those equal highs, so still expecting that. So let's drop down into this and refine this a bit more. And again, this is just going to be the inverse of the T-bond market. But again, seeing that bullish order flow, inefficiencies left open here, measuring here, boom, off to the races. And again, we were all over it like white on rice. So looking at the daily chart again, clearly seeing that bullish order flow, discount erase supporting the market higher. We've called each of these turning points here throughout the year, which is why I leave it on for my reflection. But clearly seeing that bullish order flow, all down closed candles here. We looked at this bullish order block, support. This becomes what? A propulsion candle. We trade into it, off to the races. So again, going to expect continued upside here on the 10-year yield, as long as you remain above these two down closed candles. So I wouldn't want to see us to get above, or excuse me, get below this bullish order block if we're going to remain bullish. All right, so let's go ahead and get into the currency market here real quick. So finally got the sell side, the equal lows we've been looking for. So again, volume imbalance, 3 drives higher, rejecting that lower. And then we had our attention here at these equal lows. So really nice delivery here, lower, sell side, tagged beautifully. And now we're pulling back into the range. So on a weekly chart, again, we've seen a huge move lower. So it'd be reasonable, logical to expect some type of retracement here for euro. So looking at the weekly chart in here, I have quite a few annotations. Those are all from the daily chart. Let me take that off. So what I'd be looking at in terms of a retracement is we have a weekly fair value gap in here. So that level is a level of interest that I'll be monitoring. So how we trade there will be significant. Also looking that we have a breaker here, which is high, higher, high. So this down close. So I'll be monitoring how we trade inside this fair value gap here and this breaker. And then I'd want to see a sell off. Longer term, I'm going to be looking for this inefficiency here, as long as bearish order flow remains and the dollar continues higher. So again, daily chart expanding lower into that sell side that we've been looking for, and then we see the market pull back into the range, which is logical, which is to be expected. And again, same thing in dollar. The last time we had a stop run on the daily chart was up here. which is also what? Equilibrium. So again, what I just shared with grading a price swing on the T-bonds, I was been doing the same thing here with the euro dollar. So again, this was consolidation, but when was this occurring? In August. So now this is where time and price align. So if I'm expecting consolidation in August, that's why I wasn't looking to trade too much that month. And then we see a stop run, which is what we expect where? At equilibrium. So equilibrium, we get our consolidation and stop run, and then we do what? We enter expansion phase. So again, another thing I actually wanted to cover on the bond market is that once we got below that equilibrium here from high to low and we break 50%, we leave that consolidation. That's why it's low resistance delivery lower, and it's just aggressive repricing. Why? Because once we price below that equilibrium or 50%, the market enters what's called the expansion phase. So it's just going to aggressively look to spool after the targets. So again, seeing that here in euro, we get our consolidation at 50% of the implied move. We break away from that, and then what? Just aggressive sell side offering lower for the levels we're looking at. And again, that's how I'm grading a price swing, validating these things. So again, now that we've had these levels repriced, it's reasonable to expect a retracement. So the fact that we closed above this inefficiency here tells me we're just going to be in a short-term buy program looking for higher prices. So my attention is going to go to this buy side liquidity here, which is this swing high, because all the stops that were trailed would be now above this swing high in here. So it'd be nice to see the market reprice into that. And here we have a bearish order block, which is these two consecutive up close candles highlighted by the red rectangle. So we have our bearish order block above the buy side. So how much further above the buy side can we go and I still feel comfortable with calling lower prices? The bearish order block. So I wouldn't want to see us get above that if we are to remain bearish. And then if we do get above that, then we may need to revisit this sell side. How do I know when I'm totally wrong? If we get above this bearish order block here and start using it as support, as some type of either mitigation block, then I would have to concede and say I'm incorrect, and then simply get in line with what the market's showing. But as we've discussed before, we don't have any issue getting it wrong. Again, we're not here to be right. We're here to make money. And as long as there's movements, you guys know we're going to be all over it. So again, that's what I'm looking for here moving forward on euro. So we have buy side. It'd be interesting to see how we trade there, and I'd want to see the market reject and go lower. So then for targets, after we get below the above the buy side, if we reject, I'd look for previous week's low, and then the targets on the weekly chart that I shared. So now touching on pound. So same thing on pound. We got that inefficiency here we're looking for delivered, lower low, and then we're pulling back into the range. So we have a fair value gap here on the daily chart. That's above this buy side liquidity. So again, how much further above this buy side can we go? And I'm still comfortable calling the market lower, this fair value gap. So as long as we remain below this fair value gap here, I'll be looking for lower prices. I prefer to see us not trade into this one because I'll be able to use that to key off of as either a measuring or a breakaway gap. But it can still trade into there and still be bearish. I just prefer to not see it do so. So again, this is where I'll be looking for a reaction. And then if we reject from this fair value gap, I'll look for the sell side here, previous week's low. And then through that, this inefficiency here is of interest. And then through this inefficiency, I like this sell side here longer term. That's what I'm going to be looking for here into the future. All right, so let me look at the hourly chart on euro here just briefly. So again, this swing high here would make sense. Equal highs here and here. So it makes sense for them to want to run into those highs. And then what I'd be looking for into this week is potentially something like this, where we trade higher above the highs for some type of turtle soup short and then run lower. That's what I'd be looking for. So if you were going to turtle soup short these highs, stop would at least have to go above the fair value gap here on the daily chart. But again, with the climate, with everything we have going on, that's definitely not a good idea. So through that red rectangle here, which is the daily fair value gap, if we get through that, my attention is going to go to these equal highs here. Again, there's a lot of trailed buy stops there, but it's not necessary to do so. So that's what I'll be looking at here moving forward on the euro. But look at last week's delivery. Is this anything that, was earth-shattering to miss out on? Absolutely not. Again, we hit the levels we were looking for, and then we just go into consolidation profile from Wednesday, which starts here, all the way into Friday. So as a professional trader, as a professional money manager, I'm not itching to get into this type of price action. It's not clear. It's not one-sided. It's not obvious. And again, this is how you keep from roasting accounts. So when I get asked a lot, how do you preserve equity? How do you know to become cool and collected as a trader? It's these things. I'm not putting myself in these types of environments, which is why a lot of people tend to build anxiety around their trading, is because they're trading when they shouldn't. And again, this is why I'm not that interested in trading during these weeks. Can you find profitability? Can someone, come behind me and say, well, here, look, I did this, I found this setup? Absolutely. Again, I know there's money to be made, and I'm not talking to consistently profitable traders. Again, if you're consistently profitable, obviously you're not going to be listening to, what I'm telling you to do anyway. But for someone that's finding their consistency, that's finding their footing in these markets, it's not the best idea to be pushing in this type of week. All right, so let's go ahead over to S&P. I'll go ahead and get into some questions. So we're already going on quite a bit today. All right, so looking at last week's trading, just recap that real quick. From where we opened, where was the biggest magnitude of expansion, higher or lower? Obviously lower. So bearish bias still paid, repriced into previous week's low, which is the objective. And then through that, I took our attention to these down close candles, bullish order block. So we did have 2 targets hit on a sloppy week, and then we pulled back into the range. Longer term for the S&P, I'm going to be looking for the sell side here, this inefficiency, and then ultimately this sell side here. That's again, very long-term projection for what I'm looking at. But we have this inefficiency here, SIBI above market price. So again, we displaced aggressively through this swing low here. So again, we can trade into this weekly fair value gap and still be bearish. How we trade there will be influential. So I'd want to see us, if we do get into that level, hit it, potentially not get the consequent encroachment. I wouldn't want to see us hit midpoint and then reject. And if we reprice away aggressively from this inefficiency, then that'll give me confidence that I'll be looking for lower prices on S&P. So again, I wouldn't want to see us close above this fair value gap or start displacing through it, because then I'd have to concede and then look in the other direction or just wait for more information. But again, I'm still looking for lower prices on S&P overall, and I'll be looking for the reaction here in this fair value gap. The red fair value gap that you guys see, that one's actually anchored to the daily chart, but I'm referencing this entire inefficiency here on the weekly. So let's drop down into our daily chart now. So real busy chart. Let's go ahead and clean this up a little bit. All right. So again, same thing as almost as we're seeing in the euro and other currencies. Again, we've had a huge move lower in the stock market, which again, we were all over. But look at price action from this Wednesday after we hit our levels. Really not in a hurry to go anywhere. Pretty much range bound consolidation, and which is pretty much what we saw this week. And again, I'll highlight some things in the lower time frames to really highlight what it is that I want to communicate from last week's price action. So again, we traded lower. We hit the sell side here, which we were looking for as like a first target. And then after Wednesday, we just pulled back into the range. So again, we haven't really seen daily order flow upset in a long time. We haven't seen a stop run on that daily chart. So if the market makers are going to look to reprice it lower to the levels that I'm looking for, it would make sense. It would be reasonable to see the market reprice above the swing high. Why? Because there's buy stops there. So everyone that was short, that was lucky enough to be profitable, their stops are right there. So I'm expecting the market to open, manipulate higher above the buy side, potentially into this fair value gap. Not necessary though, and then aggressive repricing lower. So I'll suspect that they're going to want a handshake, or the market efficiency paradigm, they're going to want to sell to these buy stops here and be their counterparty. Sell to the buy side, and then once smart money's net short, send it to the floor. So that's what I'm going to be looking at here on the S&P moving forward. So again, we can retrade up to this daily fair value gap, but then I'd want to see how we trade there. And again, this one, I don't even want to see it traded to. We can and still be bearish. Again, I just prefer to not see it do so. And again, we don't even need to trade into this one. We can just hit the stops and run lower. But I'm allowing for this, considering that we just opened a new month. So the monthly open was here. So we just traded above that monthly opening price. So these are all levels you're going to have on your chart: monthly open, weekly open, daily opens for power of 3. So it'd be reasonable to see some type of movement above this high. And again, so how am I internalizing this? So whenever we see a new month open, what was this move here? So we opened on Monday, and then they gave that move lower. So anyone that wanted to chase the market short, they're in. And then they're going to be stopped out here, the people that sold short early, they're going to get stopped out, and then the market's going to be permitted to run lower. So that's how I'm internalizing what the market's doing here. So going over to the Nasdaq weekly chart here, again, order flow is still bearish order block, reprice lower, and then all we did was pull into the weekly fair value gap. So how we trade in here will be impactful moving forward. I'm still a proponent of lower prices. I'm going to be looking for these equal lows here on the weekly chart, and then this inefficiency here. So this is what has my attention moving forward for lower prices. But again, all that hinges on how we trade here inside this inefficiency. If we're going to remain bearish, I'd want to see the market sell off from here. Personally, or preferably, not even trade up to midpoint. If we trade above midpoint, that'd be fine. I just have to see how we trade there, and it'll be helpful to me if and when we do so. But I'll be looking for Nasdaq to sell off from there. I know we have quite a few Nasdaq traders, so touch on this daily chart real quick. So equal lows here. So again, this is, actually I'll touch on this in the hourly chart. So here we traded lower, stopped just short of previous week's low, and then traded higher. I like this signature. Why? Because that builds in stops here. So low, lower low, it touches it almost equal and trades higher. What does retail see that as? They see that as support. They see that as a double bottom, and now they're looking to long this market. And they're longing the market right where I'm looking to sell short to them, to then rip lower against them. So again, that's what I'm favoring. That's what I'm be looking at moving forward. That's kind of the narrative and the scenarios that I'm running through my head ahead of this week. So I would want to see a reaction here in these premium levels, looking at this inefficiency here and here on the daily. So again, I'd want to see some type of reaction. And what do I mean when I say reaction? Like on an hourly or 15-minute chart, I want to see a buy stops ran, some type of breakdown, shift in market structure, 2022 model type of deal is what I'd be looking at in these premium levels. And then I'd want to see the market aggressively reprice to these equal lows here, and then this inefficiency that's linked to the weekly chart in here is what I'm looking at for targets. So first target on the downside would be these equal lows. Through that, I'd look at midpoint of this inefficiency, which would be here. Call it 1400, 400. And then through there, I'll even look for this liquidity void here, which would be this level. This is a level you guys are going to want to have on your charts as well. So looking for lower prices in the stock market still. But again, like I said, it depends on what the dollar does. I want to see dollar continue bullish, and I'd want to see some type of sell-off here at these premium levels. So again, dropping down into an hourly chart. So again, just a very crummy week in terms of delivery from where we opened on Sunday to where we closed. Didn't really do a whole lot. Frustrating in terms of the delivery. And again, I'll highlight some things in terms of what makes it not as favorable to trade. Like for example, looking at this price action here, just isolating this portion of price. Let's go ahead and make that turquoise. So looking here, this was a PM session trade. I was looking at, again, I wasn't trading because I don't trade Thursdays before non-farm payroll. But what are these here? We have equal highs here and here. So what's the expectation? The market's going to want to do what? Trade higher and take out those highs. So that would be a target for me. So what's frustrating about these types of days is it's not going to deliver as we'd want. So with NQ and ES range bound, so imagine if I was to live stream on those days. It's frustrating. Price is not hitting our targets, and there's really no follow through. Here, as we're seeing with S&P, trades higher, no follow through. Looking at Nasdaq, let's drop down into an hourly chart. Here we have this sell side, previous week's low. If I was live streaming here with you guys, we'd be watching the market run down to this level here and this level here. But again, it stops just short of our targets. So, with ES and Q not hitting our targets, stopping just short, this is characteristic of these days and why I don't like to trade them. Normally we give targets, or on live streams, I'll tell you guys where the market's going, and then it'll run to them. And then, we'll joke about how, all this is random and, ha ha ha. But in these markets on these weeks, I just typically don't have that. So that's what I try to preach to you guys here, which is what makes what we do here superior to everything else in terms of analysis, is that we have an extensive protocol and procedures of when not to do things. While everyone else is trying to impulsively trade, do things they shouldn't be, that is maturity and wisdom. And many don't appreciate the value in that. But if you hurt yourself long enough in these markets, you will grow to appreciate good wisdom for what it is. But again, just wanted to highlight some specific characteristics as to why these specific days, these specific weeks can be problematic. Because again, that's frustrating to me as a trader. If I'm trading, if I'm going short, these are my objectives. And when it stops just short and doesn't do it, that's a missed target. And again, I know when these things are likely to occur. So if I know these weeks are going to deliver like this, why in the hell would I put myself in front of these charts? Because again, I would look like every other live streamer on YouTube if I was to get on these days. So again, definitely want to take that value for what it is. So looking at the weekly chart here, again, just really sloppy delivery the entire week, not doing a whole lot. Friday rallied higher. And again, I'm seeing this as a rally higher into a premium to go lower. Again, we go higher to go lower. So my attention on the daily chart was this swing high here, and that's the same level we're looking at here on the hourly. So what I'm looking at going into this week is we have equal lows. I love to see that here. And then same thing that we see on NQ. We have all these equal lows here. Beautiful. That's stacking victims or orders there for the market to then aggressively retrade into to then be counterparty. So here we see Nasdaq did what? Equal highs here. That was too clean. That was too enticing. So it makes sense for the market makers to want to reprice it into there. Why? Because if they are like we are, we're longer term looking for lower prices here on the stock market. So we'd want to see it repriced above these highs. Why? Because anyone that was short trailed a stop and they got knocked out there. So now that they got knocked out, who's getting on their bus seat? Smart money. So I'm going to be looking for a rejection above these highs to send us lower, again, which those levels are linked to the daily chart. So same thing here for S&P. We have this buy side here and these equal highs. So it wouldn't be too much of a stretch for the market to want to reprice up into those levels here. This is the specific level I'm looking for, but if we get there, it wouldn't be too much of a stretch to trade into these levels. And then again, how we trade there will be influential. So I'd be interested in seeing some type of opening rally higher and then seeing the market trade to these levels and then sell off aggressively and run for these lows. So that's personally the scenarios that I'm going to be looking for going into Sunday's open. But again, that depends on a lot of factors, how we open, how we trade after we open. And again, there's a lot of things going on around the world that could open up the possibility of what's called manual intervention. And I covered what that was last week, I believe. All right, so with that, my analysis is concluded. That's everything I'm going to be looking for this week, what has my attention and what I'm going to be expecting. And then as always, I'm going to be keeping you guys ahead of the curve in the Telegram channel, letting you guys know what's going on. Gordy D, markets are closed on Monday in the US. Yes, they are. All right, so let me go ahead and get to some questions now. Emmanuel, what's good, brother? How are you doing? Doing good, my man. Doing good. Hope you're well. Raptor, how do you manage partials? That's a pretty extensive protocol in terms of how I manage my trading. I've covered it in live stream, so if you want to learn from me over the charts, explaining what I do, how I manage myself as a trader, I think I give pretty good free game in those live streams. Madara, hey Dylan, what do you think about day on Twitter and just quarterly theory? Is it accurate? So I've been asked about that a lot, and you guys are probably tired of hearing about it. But so I don't disagree with it. I don't agree with it. I don't know enough about it. I know people that find success with it and are doing well. Fantastic. Personally, I don't need it. The timing elements in terms of how I look at it, how I conceptualize time and what the algorithm's doing is more than enough, more than I would ever need in terms of my own analysis and how I use timing elements. I personally don't need quarterly theory. Like, again, I see some people doing well with it. I see some people not doing so well with it. Again, it's really up to you and your personal study. But again, it's nothing I use though. Is new week opening gap only for futures? Yes, there's gap opens even on the Forex market as well, though. I'm pretty sure. Yeah. So yeah, it's something that you use in futures and Forex as well. KK, could you show what ICT said about redistribution phase? Yeah, I covered that on the bond market. That's what I was looking at. So that redistribution is the second stage delivery lower into the original consolidation that I was covering on the bond market. And then that's pretty much the same silver bullet setup that he was outlining there. But again, that's not nothing new that he covered. That's stuff that he shared a long time ago. It's just, again, I think it's just being brought to light for the the public, the YouTube students. Hey bro, if market sweeps old high / low, do you wait for another sweep on lower time frame? No, man. Personally, if I get the parameters I'm looking for, if we take out a specific high or low that I'm looking for, and then it creates the model that I'm looking for to deliver, then that's all I need. I don't need to wait for any type of confirmation in the lower time frames after that. So let's look at an example. Like this high here taken out. If we broke down, I wouldn't need to see another shift in market structure or stop run on the lower time frames. Lucas, with news coming, when would you normally expect the high of the week? So normally it depends on the news. So like if there's a high impact news driver like a CPI on a Tuesday, then I'd look for Tuesday to make the high of the week. If it's Wednesday, then I'll look for Wednesday to make the high of the week. But again, with the conditions we're trading in, these are the hardest market conditions that we've ever seen, ever. And that is even from my conversations with people that have been in these markets longer than many of us have even been trading. These markets that we're in are extremely difficult. There's a lot of things to contend with around the world. Again, not just in your neck of the woods or where you live, all over the world, there's things going on that make these markets extremely challenging. And it's not something to be taken lightly. Again, the risk is extremely elevated, as we've been discussing here for months. And again, I can't get too deep into it because YouTube, they have to, control the narrative and what people can say or can't say. So I have to be really careful with that so they don't scrub my channel. But, we're just really seeing these things come to light. And as these things come to light, it has further reverberations than just the what's going on itself. It's going to affect the marketplace, the delivery of price, and all those things. So they're definitely things to consider. Markets are closed Monday in the US. Yes, they are. Do you look at something like 2D and 3D charts? I'm not sure what that is, brother. Anita, everyone hit that like button. Yeah, please do hit the like button. Comment if this is helpful, what you guys would also like to see more of. That helps me out here a lot. Thanks for the support, Anita. Much appreciated. Christian Cadet, thank you, Dylan. Great analysis today. See you on the Telegram, the new greatest of all time. Thank you, Christian. I appreciate that, my man. High-speed trading, CL, expecting a big gap. How to look at that? Yeah, crude oil is going to be on something when we open. And again, that's why I'm going to be all over it. As soon as we open here at 6, there's going to be all sorts of stuff going on the charts. So crude oil, again, we've called this monster move higher into these equal highs. And then I just said I'm just going to put a pause on it. Again, I'm not interested because once you call a monster move like that and you trade it, that's it. The bag's been collected. There's nothing to force. There's nothing to do. So I'm just going to wait for the next setup to show its hand. So given that we retraded to these levels and then we broke through this down close candle going into Monday of the previous week, I took my attention to lower prices. I told you guys that a logical retracement would see this inefficiency delivered here. And then we got that last week. So we did get our targets hit for crude oil. And then I took our attention to this breaker in here as well. So we have a breaker and the inefficiency here. So how we trade there will be significant. But again, crude oil can gap a huge amount higher or lower considering what's going on in the Middle East with, WAR and all those types of things. So those are all things to consider moving forward. But again, we see 1, 2, 3 drives higher into our levels. So we called the 94, 95s. It printed that, and then we pulled back into the range. So now that we traded into a discount of the dealing range from high to low, here we're in discount. We hit a discount efficiency. I'm going to want to see how we trade there. If we're going to continue bullish, the market should show us here and then start repricing higher. But if we get through this breaker here, this consecutive 2 up close candles, if we get through that on a closing basis, then I'll have to switch gears. But for right now, I'm still looking at higher prices just based off the weekly order flow here. The monthly order flow, still bullish here on a monthly chart. We took out a swing high. We just pulled back into a monthly fair value gap. So how we trade there will be influential longer term on crude oil. But again, I wouldn't hang my hat too much on what I'm saying because again, when we open here at 6, it's going to be madness. And again, that's why I also covered you guys why I don't hold over the weekends anymore. I don't hold over weekends, and I don't even really like to hold from the transition from the 5 o'clock to the 6 o'clock trading in futures for the Globex trading. I don't even like to hold into that because the gap risk. for example, right now, I mean, imagine being a trader that held, a crude oil trade. They are shitting bricks right now. They're sweating bullets because the market is going to open extremely, is going to be a big disparity between the open from where we close Friday to where we open. And that risk is immeasurable. And that's why I don't trade like that anymore, because I don't trust these markets, everything that's going on in the world. Those are all things to factor. So again, high-speed trading, that was a long-winded way to get around to what I'm saying. So again, we're in a discount, breaker, fair value gap. How we trade there will be influential. If we just start melting through it, then my attention will go to lower levels. But we are still bullish longer term. And this retracement here down to a discount doesn't necessarily change my longer term stance. But again, how we trade here will be influential. But again, obviously, my entire analysis could be wiped out if we have an extreme gap higher or lower. Amy Moore, thank you for your great insights. Quick question. What was your analysis on oil, Dow, XOXL? So I covered oil. I'm going to touch on Dow real quick since we were just touching on the index futures. So again, we've been calling the Dow lower. We were looking at this. All right, let's pull up the continuous contract. So we were looking at the sell side here. So we traded down into that sell side. And then through that, I took our attention to the rejection block here and these equal lows. So longer term, I'm going to look for the Dow to be reaching for these equal lows here. So below 30,000 on Dow. You guys heard it here first. But again, let's not get too far ahead of ourselves. So we're still seeing bearish order flow. Again, we repriced through these lows I was looking for. And then we've seen a measure of retracement, again, which is logical. So here we have an up close candle, bearish order block. So I'd want to see how we trade into there. But again, the reason I'm a bit reluctant to give you guys, a hard and fastened analysis is because all this can change in just by how we open here in a couple hours. But if everything stays the same, bearish order block, I'd look at this inversion fair value gap here, extend that through. I wouldn't necessarily want us to see us get above that. So we can trade into it. We can hit up the midpoint, but I wouldn't want to see us get through that with speed. If we do get above it, close above it, then my attention goes to this inefficiency. But I'm not expecting that. I'm expecting the stock market to continue being extremely weak in light of everything that we're seeing around the world. All right, Amy Moore, hopefully that covers that. Mayoa King, thank you so much for the analysis. Appreciate you joining us, my man. Remnant Capital Trader, great insights there, big brother. Awesome, my man. Glad it's helpful. Lo-Fi Jang, always bringing the fire, bro. Much appreciated. Anita, awesome analysis as always. Hope you do a few lives this week. I know we all love those. Yeah, definitely. And I'm actually going to go ahead and use this opportunity to let you guys know, what I'm thinking in terms of mentorship and what I'm going to be doing here moving forward. So again, I've been telling you guys that I was going to plan on beginning the mentorship or private training, opening that up to you all, beginning in late November, early December. Well, after discussing with my associates and some things I have to do in my personal life in that month of December, I'm going to be moving it to January. Good news. So I gave you guys the bad news. Now here's the good news. Good news is I'm going to be live streaming with you guys every single week until that time. Reason being, after, discussing again with my colleagues, my associates, it's going to be the holidays. Many of you guys are going to be on vacation from work, enjoying time with family. And when we do start mentoring, when we do start training, it's going to be extremely demanding of you as the student. So with all that in mind, I didn't want to put you guys in a position to where you have to sacrifice that family time to stay on top of your studies and everything we're doing. So I'm going to push it to the first week of January. And then as soon as we hit calendar day 1 of January, we're going to be getting to work right away. And then again, that's when everything changes for you guys moving forward in terms of traders, in terms of your trading, your analysis, and where you're going to be at. So again, January is where we're starting. The good news is until then, I'll still be live streaming with you guys here 2 to 3 days out of the week if I can. So I'll still be working with you guys, hanging out with you guys over some live price action. So thanks for the suggestion, Anita, and I'll definitely be doing so. All right, so let me take a look at some member questions. We have actually quite a few. Frank, could you take a quick look at CL? I believe I took a look at CL, Frank. If you could let me know if there's anything else you want me to look at, I'd be happy to take a closer look at it for you, my man. When will the high of the week be formed? I expect it will be Tuesday or Wednesday. Yeah, I'll be looking for Tuesday or Wednesday also. That's what I'll be expecting. Jay, if there are no fair value gaps formed during the optimal trade entry, do you skip this entry? No, personally, I don't need to. If I know where it's going and it's at a level I want to do a transaction at, I'll be all over it. I have several entries, and if I need to, I can go into lower time frames and not force what I'm looking for, but let's just say it like this: if I'm looking to get in and I know where the market's going, I'm in there. I don't need specific things to be in place. I know what I'm looking for, and I can be ultra aggressive with an entry, manage risk, and do everything I'm looking for. Tommy and Eaton, great delivery as usual, brother. Awesome. Much appreciated. Owen Boyle, thank you for the analysis. Thanks for joining, my man. Cedric, Adora Trading Gold. Awesome. So I think you've been with us for 3 months. Awesome. Thank you, Cedric. Appreciate that. What do you think about Bitcoin right now? It seems to not be in the risk-off scenario these past couple weeks. Let's take a look at Bitcoin. Yeah, and again, this is why I don't like to look at Bitcoin. I remember I looked at Bitcoin like 3 or 4 months ago to see what it was doing, and it hasn't done anything. That's why I don't like looking at this market. It's not satisfying. So we're just still in a consolidation for Bitcoin. We're inside this inefficiency here. So I'd monitor how we trade there. Again, I'm going to be expecting a lot to be going on with the markets when we open. So those are all things to consider. But this fair value gap here, we broke down. And again, I'm more reluctant to call these types of markets because they just don't deliver as clean, and I'm much more prone to be incorrect. So whenever I'm giving analysis to you guys, it weighs on me quite a bit because, I understand that you guys are trying to do things with these analysis. So looking at Bitcoin here, moving forward, we're inside this inefficiency and we have equal lows. I don't suspect that those equal lows are going to remain intact. I expect them to actually be roasted. But what are we going to do till then? Are we going to consolidate for 3 more months? Who knows? That's why I don't really like looking at this market that much. Because again, we've been seeing a lot of acceleration higher on dollar, and Bitcoin should be selling off as a result, but it's not. It's just been in consolidation. So monthly chart here for Bitcoin. So we're trading into this bearish order block here and fair value gap. So how we trade there will be influential. So if we start rejecting from in here, which is personally what I'm favoring, I'll be looking for Bitcoin 25,000. Through that, I'll be looking for Bitcoin 19,000. Through that, Bitcoin 15,000. That's what I'll be looking at longer term here for good old BTC. Yeah, all right. So covered that. What software package do you use for your live streams? I'm not aware of any software package, actually. You'd have to talk to my associate, Abraham. He takes care of all that. So I don't know. I know I have OBS open in front of me, and I hit start streaming, but that's the extent to what I know, my man. Do I use 2-day and 3-day charts? Oh, yeah, I do. Lucas, I use several different charts, actually. If when I'm doing analysis, I'll look at like 2-day, 3-day, 90-minute charts, 6-hour, 8-hour charts, because what it does is it allows me to see different inefficiencies that wouldn't normally be seen on what's considered traditional or classic time frame. So I am definitely using what would be looked at as non-traditional time frames, definitely. Because the algorithm isn't limited to daily, 4-hour, 1-hour, 15-minute. It's using an array of different time frames, and it's working them top down, bottom up. How long you been trading? Your understanding is very good. Thanks, Just. Really appreciate that. 4 years in the financial markets. Olawale, PhD level analysis as always. Thank you. Thanks for joining us, Olawale. Support's much appreciated. Christopher, this guy killed it as always. I hope we get a live stream this week. Definitely. I'll do some live streaming with you guys here this week. Euro USD open and falling. Oh yeah, the currency market open. Yeah, so yeah, I'll be doing live streams with you guys here this week. We'll hang out over some live price action, and I need to see what the legal ramifications are, because I wouldn't even be opposed to like taking trades in front of you guys, like actually having like a demo account open, and like for example, whenever I'm calling the market lower, I say, okay, this fair value gap watch, we're gonna hit that and run lower, and then just put a trade on, just like show you guys for illustration's sake. Obviously not financial advice. I don't give financial advice, and I'm not licensed to do so. but I'll have to look at if I can legally do that and not be a financial advisor. But yeah, that'd be pretty fun, taking some trades here in front of you guys. So we'll look to do that. AB, key that NFP has two-stage delivery like FOMC. ICT emphasized this in his vid again. My long in NQ, 1020. Yeah, I got a long on Friday too. Curious if mentorship will be key towards new trader. That's a good question, AB. So curious if the mentorship will be keyed towards very new traders or more intermediate or I guess more advanced traders. Yeah, definitely. Everyone will be able to come in and be integrated. It's not going to be overly basic in the first month or two. It's going to lay a foundation. And many of you guys really that are more versed in ICT's concepts, that obviously you don't need the beginner course and like what's liquidity, what's an inefficiency. Again, a lot of the time I do see, when I've trained and worked with other clients, I see that the understanding is there. They know enough to be profitable, but a lot of times it's just the basics that are forgotten. And that's what keeps a lot of traders with a lot of knowledge struggling. So it will be catered to all levels of analysis. It's going to get beginning and it's going to be structured from what should be learned first all the way to the end. So A to Z, everything's going to be mapped out, what you should know in the order you should know it. So again, it's going to cover all levels of experience for sure. Look at the gap open on EU and GU. Yeah, let's go and take a look at that. It doesn't show a gap on mine. That's weird. But wow, yeah, market aggressively repricing. Yeah, so that's what's to be expected. So I'm going to go ahead and check this out here on my own. Let me go ahead and finish some questions here with you guys. Tamek Mad, what is turtle soup? Could you explain it? Yeah, let me go ahead and look at a turtle soup here with you guys. All right, so for turtle soup to work, again, giving you guys some overtime today. All right, so look at Euro. We'll look at an example I called. So why was this a turtle soup short above these highs? Well, because our attention was here and here. So once we know where the market's going, again, I already told you guys how we know to expect when the stop runs are going to occur. And this would be a classic turtle soup right here. So you just sell to the buy stops. So that's all turtle soup is. You're just selling to old highs. So you'd be selling to the buy stops here. Why? Because our attention's down here. So you can sell to those stops and then run it lower. So that's turtle soup. Mayo came. I'm excited for the live stream. Thank you for always putting us in mind. Very much appreciated. Thank you. Absolutely. What time is your live trading? It's no set time. I'll let you guys know in the Telegram. I'll try to do a day before. Thanks for the live streaming. Absolutely. And again, all the details on mentorship will be out on the website. So again, now that we're pushing it to January, I'm going to begin the enrollment in late November, early December. We'll start the enrollment. And then again, I'm going to be putting together lesson plans, get everything structured and organized so that obviously we can get you guys to be in some independent traders. Because obviously the goal is to get you guys to a point where you don't have to come back to my YouTube. You don't need to go to ICT's channel. You know what you're doing. You know what you're looking for. And then you cut off the noise. So that's where I'm going to be taking you guys, to the promised land. If CL opens up with big gap, what will you be looking for before considering getting back into that market? So yeah, I'd want to see how it's trading. Like, for example, this is what you have to be careful during black swan events. And again, this is why I'm being very careful and detailed in my delivery today, because there's a lot of things going on around the world. But not saying crude oil is going to do something like this. But let's say we start trading like this, where we gap lower. What's that? Almost $8. So 10% on crude oil, where we just gap lower. This is extreme manual intervention. And if the market starts trading like this, I don't touch it, because look at this gap lower on this day. So if you were short crude oil, or let's say you were long crude oil over the weekend, and then it gaps lower $8, that's tens of thousands of dollars per contract that you are now in the red by holding a long over the weekend. So again, that's why I don't mess around with risk. If risk is elevated in a market, I'm not looking to touch it. I'm not going to fancy dance around it, because that's how you get crushed. So what I would be looking for is the market continues delivering normally. We see the algorithms in control and it's doing, typically what we would want to see the market do. If we see that occurring, then it'd be fine to trade it. But these type events here, where it's just aggressively repricing higher and lower manually, that's not something I'm terribly interested in. So I'm going to want to see, I'm going to want to observe it. And then you'll know if it's manual intervention or if the algorithm's in control of repricing. So that's what I'll be looking for the CL. Thanks for the update for the mentorship. Always appreciated. Absolutely, Denisha. BTC looks like a snake. LOL. Yeah, big Bitcoin. For investment wise, like, longer term trading, it's fine, but short term, it's a headache. It's a headache. I don't like trading it. KK ICT said NFP week, you can trade Mondays. Does the same thing apply to CPI and FOMC week? So there's certain criteria in terms of what I trade Monday. So again, to give you the extensive list of what constitutes a trading or non-trading day, that's something that obviously I'll teach, once we're working together officially in private training. But I'll give you something here now that'll be more than enough. So look at Friday here on S&P, just for example. We had a huge range. So once we have a huge range Friday, I don't typically like to trade the Monday after. There may be a move, but again, I don't care about missing moves. I know I'm going to have more setups. So if there's a large range Friday, or like on the heels of like non-farm payroll, the Monday after, I typically don't like to trade it. And then if it's a bank holiday, even more reason for me to not want to trade it. Cedric, thanks, Dylan. Absolutely. All right, so let's go ahead and get going. Let me make sure I don't have any more member questions. Anita Lowe, fire on live trading. Awesome. Dylan, take trades with us. All the others do it, and they make a disclaimer. Yeah, I'll probably I'll see what I can do for that. No, I'll look to see what I can do. Tips on placing tight stop losses. Refer to my YouTube videos. A+ trading model covers the way I place stops tight and how to keep it not too close, but obviously having a precision close stop loss. Not really market related. What does your setup look like? I have 4 monitors in front of me. So I have a 16-inch MacBook. I have a Mac desktop, and then I have 2 other monitors that are connected to those. So I'm looking at 4 monitors. Anita Lowe, even when independent, I will still be here. Always appreciate you. Thank you very much, Anita. I appreciate that. For sure. All right, so I think we're going to go ahead and get going here. So I believe I covered all the member questions, so we should be good to go. All right, I'm getting quite a few gold comments, so we'll take a look at gold briefly. So I'll keep it real with you guys. I'm looking for gold to continue cratering. Let's look at USD, because as long as they keep repricing dollar higher, that will continue allowing me to look for lower prices on gold. So my associate was actually all over it. He was calling lower prices for gold in here, and then we smashed lower into his targets. So what I'm going to be looking for on gold here longer term is this sell side here. So we'll look at 1805. Through that, aggressively, I'm looking at 1727. And then longer term on gold, I like these lows here at the 1600s. So that's what I'm looking at for gold longer term. And then equal highs here, beautiful. We have unfinished business there, but not until at a later time. And again, that has to do a lot with central bank digital currencies and stuff like that. But again, that's beyond the scope of this of this live stream. So, all right, daily chart for gold. We have these equal lows here. So we almost got to my target that I had last week, which was the sell side here. So getting real close to those lows, but stopping just short. And you guys know how I look at that. I like to see that because that means that as they retrace, that's building in more sell side here that they're eventually going to want to smash through. So what I'd be looking at here for gold, I'd extend this fair value gap through here. And I'd look for a reaction in this fair value gap. So inefficiency here, inversion, I'd look for the market to sell off from here. That's what I'd be looking for on gold. Again, assuming dollar continues higher. Colin, great show as always. Absolutely. D. Patel, thank you, Dylan. All right, so I covered gold. So we're just looking good. Awesome. All right. All right, everyone. So that's going to go ahead and wrap it up here. So appreciate you guys joining us. And again, appreciate the support that you guys have been showing, sharing what we're doing, telling your other colleagues about, again, what we offer here. And just want to let you guys know that the support is greatly appreciated. So with that, I'm going to go ahead and wrap it up here. I want you guys to all be safe. Have a great rest of your weekend. And again, keep in mind the elevated risk we have going into this week. You're definitely going to want to keep that in mind because, again, as traders, risk is always more important than reward. So with all that in mind, I'm going to go ahead and sign off here. Hope you guys have a great rest of your weekend. Take care this week. Good luck and good trading.